What it do?
Can I not cook?
You can cook. I don't care. But what it do?
Wait, how long is that gonna take?
Not long, 10 minutes or less.
I'm gonna get my phone real quick. Let me get that.
Hurry up and buy.
Hmm?
Nothing. All right, man. So I figured it out. It's been sitting on me for like 3 days. It's been sitting on me for about 3 days, and now I know what it is. So straight to the point is mid caps, baby. Minute in, mid caps, baby. I'm gonna tell you why, right? So about 2 months ago, no, what is it? October, June, July, August, September, October. 4 months ago, right, when I started this trading stuff on paper, as you can see on the Excel sheet, I pull it up for you guys. Wow, there it is right there, Excel sheet. We ain't gonna hide no balance or nothing like that. We're gonna keep it modest. So check me out one time, right here, the 14th. What I can say is this, man. The companies that the options, right? Like for EMB, right? CVE, DVN, FE. They real cheap, really cheap. Mixed in with a company here that's expensive, that's a company here that's expensive, that's a company that's here that's expensive, right? So what we're gonna do, this is the technique that we're gonna follow from here on out. We're gonna stick with this technique that we have right here on this Excel sheet, spreading them out. But one thing that we're gonna change is if the option is over $500 on a $10,000 account or less, on a $10,000 account, it's 10 to get in, minimum point blank. On a $10,000 account, we can't buy the option. Simple as that. So for every 10,000, $500 on the options, and I'm gonna relate it to sports betting. With sports betting, right? A lot of teams that are high profile teams, like say for example the Lakers or the Celtics, that's a very high profile game, right? On the same night, you might have another high profile ticket team like the Sixers versus the Pacers. The odds on the Pacers and the 76ers, the odds on the 76ers and the Pacers and the Lakers and the Celtics might end up being the same. The only difference is it's a mid cap, it's a mid cap company, it's a mid cap team versus a high cap team. On the same car, you got a high cap versus a high cap. Typically, when a high cap and a high cap, it's a tight game, so you really want to stay away from it. And a lot of times, the public bets on those type of games. When you're going to the 76ers versus the Pacers, it's still a high ticket game, but at the same time, Pacers is a very low modest company. I'm gonna relate it to stocks. It's like Apple teaming up with a company called Globalstar, or Verizon teaming up with a company called ASTS that I talked about a couple months ago. It's the same ordeal. The only difference is you're not betting on a company that everybody is betting on, like Microsoft, Google, Apple, Amazon. You're basically betting on partnership. We're going to start betting on partnership companies and looking for partnership companies that have large cap investors. So their money is coming from somewhere. All of these different companies have AI money on budget. They have free capital to invest, and now they're looking for companies that are on an up and rise with new inventions as we proceed into this AI advanced market. So that's the strategy that we're going with. So, and as you can see, right, as we go down the list, a lot of the companies that we originally had were not like super expensive. All of the options were between $500 and $700. So that's the thing. Once the contracts start getting over $500, it costs too much. Because if you think about it, if you put $500 on 20 contracts, right, you only got one time to go in. What if you got 20 companies? What if all 20 of those companies don't go? What if only half of them go? What if you only break even? Now you don't got no more money after the market has pulled back, as we have seen, such as today. So, with that being said, for every $20,000, for every $10,000, you can't buy a company for over $500 options out for 1 month minimum. Next, next, for every, I'm gonna just say for every $20,000, it'll be $1,000 contract. So if you start off with $20,000, you can start jumping into a contract for like 1,000. But you gotta have at least, but you don't want to spend over a third of your capital per trade, because what if it dips once or twice? You feel me? And then you got other companies that might appear better. As opposed to doubling down on those contracts, you could just move money to another company. Because you got to think, right? On one contract for $1,800 on a Microsoft or a Google, right? If the stock moves 1%, right, as a total, if it's a $400 company, that's a 40-point move. That's your whole entire contract. You feel me? As you grow out into, that might be the first week, that might be the first 2 weeks. Hopefully the guide is not the third and the fourth week, because then your contracts expire worthlessly. So we're going to test the theory real quick and just see where it's at. Because I know when these companies, like, and then again, the Russell 200 of mid-cap companies, what we're finna go into, have been making press since about June. And as we go into this hyperinflation system, the bigger companies, of course, they're going to get bigger, but not as much volatility is going to go into these bigger cap companies. They're going to be putting their money into other companies like up and risers. This is where the new creators are born right here. So let's test this theory real brief, man. So we're going to go same thing, new screener, changing one thing. We're going to go from 2 billion to 10 billion. Actually, we're just going to go mid cap right here. We sticking with the same techniques, right? Our trading rules. Number one, must be touching the 20 or the 50 simple moving average. For these companies specifically, since we're going in lower cap companies, we definitely want them to only be touching the 50 moving averages. So that's going to be like our number one rule. Only companies, mid cap companies that 20 and the 50, deciding between the 20 and the 50 is out. We're going strictly with the 50 with the small cap companies. Too much volatility. Number two, only opening up one contract per $10,000. So now we're down to about 6. So we're opening up contracts that are basically 5 and below. You feel me? Really like 3 and below. Number 3, red day is buy day. Green day is sell day. So like right now, I should be buying mid-cap companies. So I need money to the side to set aside. The best days are Wednesdays and Thursdays to basically sell your contracts. Friday and Monday, best day to buy. Focus on companies that sell products. That's number 5. Number 6, no healthcare options. Not playing around. Number 7, no foreign companies. Number 8, I might be able to interchange that number 7 out. I might be able to do number 7, just depending on what type of company it is. Number 8, like if it's a Baba or something like that where China is just pumping out products, we can do it. Number 8, ignore media hype. We should already have been sold the company by the time it hit the news. Number 9, the watch list before are old plays that we're gonna basically be looking for. So like companies like this one. CTVA. Let's just look at that one real quick. CTVA, see what it did. 61, we got it at 52, so that's like a 10-point move. You feel me? That's good. Actually, let's just look at some of these companies right here. We can do MFUG, Mitsubishi. Mitsubishi not a small company though. That's a bad example. JD is small. And it went up 40, it went up 20 points, you feel me? So we could have held that contract, like a $27. Like this is how we're able to get paid out far. For sure. This is gonna work. Let's try First Energy. 38 to 42. It's cool. But then again, like these contracts are gonna be probably like 60, 70, $80. You double down, get like 5, 10 of them, get like 5 of them for like 300, 400. Boom, you're doing good. Let's do Regis. See what I'm saying? You feel me? You see what I'm saying? So it's looking good. It's looking good. It's looking good. It's looking good, P. I'm liking what I'm seeing. Because what it is like we're going to have money to roll over. We're going to have options to roll over. We're going to have options to roll over. A lot of these companies ain't even moved. It's July. Yeah, but these are not mid cap companies though. Let's just go to the mid caps right now. So let's just look at from June this year. Mid caps, where we would have been at. I'm just going on months. No, it was on a week. Alright, let's check it out. Oh, you know what? We can range the date. Custom. We're gonna go from a couple months back. Not a couple of years back. We're gonna go to June 1st. Actually, we started on June 14th. Confirm. And we're gonna go on the weeks. Oh my god. My bad, y'all. Here we go though. Here we go. No more messing up. Wow. Let's do it. Alright, so this is even. Look, China auto manufacturer. Pretty good, pretty good. Like the stuff that we want to see. Aerospace and defense, we in a war. Definitely stuff we want to see. Engineering, construction, gold, definitely something we want to see. So I'm saying definitely something that we want to be in. Insurance, definitely. That's cool. That's like a little, like just like disasters. You feel me? It's like people dying. You feel me? So if like a pandemic come, pop. Building materials. This is like for housing and stuff like that. That's good. See, look, housing, boom. You feel me? Internet content. See what I'm saying? Match.com. You got shit that you know gonna work here. Yeah, this gonna work. This is gonna work. This 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 gonna work. Watch. Cause we coming from like right here, right? 60. Boom. Like we would have got a good little return. Western Alliance. It's a bank. It's probably like Western Union. You know niggas gonna be sending money. Boom, 65. Yeah, man, we looking good. Communication equipment. It's like phones. They doing good on the year to date. Yeah, this is where it's at. This is where it's at right here. I'm telling you, this is where it's at. Telecommunications. Packaged foods. Oh my god, and it's a USA company. Like, bro, this is where it's at, bro. So like when the strike come, like now they gon' poof. You feel me? Strikes, they like, man, boom. We down 3 rackies. That just hit me right here, like a little part of my heart just got touched with that $3,000 mark right there. I'm not gonna hold you, but fist pump, nigga. Donald Trump, keep faith alive, bitch. H&R Block and shit. You feel me? Like we like how can H&R Block not make money? Niggas always gonna file their taxes. REIT, boom. Good company, boom. It's about to hit support at 43. REIT again, boom. Semiconductors, shit we want to see. Stuff, excuse my language, stuff we want to see. Asset management, depending on who they following for their books, you feel me? They could be making dough. Year to date, they down too, so they not really making no money. 2%. 2% on a $7 billion company is bad. There's a lot. It's like, that's $14 million. No. $140 million that they lost just this year. Woo, woo. See, that makes me feel a little better about this 3,000. It's like yeah, yeah, that makes me feel a lot. See, stuff like that right there. They down 2.6% on a $7.8 million company. So 1%, let's just say 8 million. 1% is 40 billion. No, 1% is 400 billion. Yeah, damn, they down almost $1 billion in a year. If my calculations are correct, I'm not exactly sure. Carpenter. I don't know why that came up. All right, so yeah, I'm feeling it. I'm feeling it. ASTS, look, boom. Oh my god. And another thing that we gonna do is use this. I'm gonna put y'all on some game real quick. Seeking Alpha, man. It's this website right here, bro. Oh my god, it is for the news. These niggas, they are the greatest. I'm not gonna hold you. Any stock news, bro. Damn. AMD probably gonna just be worthless. This shit is bullshit. I mean, it's probably gonna be worthless. It's that one 98. So it's about 88%. PNG, whatever. Microsoft did me in, bro. I was crazy about Microsoft yesterday. Then DEC did me in too, man. I didn't expect that. And then Google basically was up like 100%. That one pulled back crazy. But anyway, here we go. News. Hit the news. Boom. I do got an account. I just don't feel like signing in. CVNA. See what I'm saying? See what I'm saying, man? We gotta make some movies. Let's make a movie. Watch this. Watch this. So we're gonna go to the weeks. Boom. Reset it all up. Get everything on the flow. Go to page number 1 to 24. Like I said, this one's a good little setup. Boom. Gotta be touching the 50 for me, bro. Can't even play with it. This one touching the 50, but they're a little too close. Foreign country. No. This one looking kind of cool. H&R Block, like I said, they probably only going down during the off season. As soon as January 1st comes, they gonna poof. It's a little bit too far out. I need straight day trades. Low key, we gonna go to small and better. Overall, and we can go high to low. That's cool. Just a lot of these companies already seen. We're gonna go from 300 million to 10 billion. To 10. I don't think I did that right. Oh my god. 300 to 10. Why are you playing with me? Capping. Whatever. This is what we're gonna do. We just large caps is crazy. You're just gonna get them up right here. You having girl problems? I feel bad for you, son. I got 99 problems, but I woke up with Jay-Z like just playing today. I don't know why. I'm not even from New York. This account just whatever, bro. 33% down. Looking ugly, gang. Looking ugly. Amazon got earnings today, though, right? Way more than certain. If they smack today, boy, it game over. Let's look at the stock. I'm not seeing it. You feel me? Actually, it is telling me to sell right here. Like this one. Let's go on the day. So this is where the uptrend ended. This is where it ended. And this is where the downtrend ended. And then it hit resistance here. And then it broke through resistance and stopped here. It got support right here. It got more support here. These are supports. And this is the entry right here. This is the entry right here. So technically it should go a little lower than this. It should go a little lower than this. But it is on an uptrend. Oh. It is on an uptrend. So like, alright, so look, this downtrend ended right here. And this uptrend ended right here. We can call it right here. From this uptrend, September has been in consolidation for a month. It's been in consolidation for a month, so this is the end of the uptrend, and it goes down. So the end of the downtrend would be right here, which is right below this candle, and it broke above the 20 simple moving average on the day. So and it's not even at the all-time high. Okay, so and it broke the resistance of the last all-time high and came back down to, so if this one is so it can come all the way down to 184. It can even test to like, it got support at, do it. So the next thing that we look for, so yeah, it does have support at 181, because you see right here, this inverted hammer was the next bullish run. So it went inverted. If you go right here, support broke a little bit beyond support, about $8. That's why we got to do mid caps, bro. This is why we got to do mid caps. This is exactly why we gotta do mid caps. Because that $8 move is damn near the whole contract. Like it's like 50, 60% of the contract. We gotta do mid caps, P. We gotta do mid caps, bro. Because look, bro, I paid $848 for the contract, bro. It's not cool. Like that's $338 over what I'm supposed to be paying on a $10,000 account. That's why this shit got crushed. Now another bad earnings report. It's like damn near. It's like I gotta stay in these trades now, bro. I have to. I don't got no other choice. I gotta ride them out. You feel me? If I sell here, it's all bad. The only thing that we got good in our favor right now is this Fed cut, fool. That's it. Like that's it. That's it. That's all. That's truly it. I'm telling you. So Google is doing all right. P&G, like they need some earnings. They already had earnings though. That's what's so crazy, bro. And they beat them, but they still didn't do good. They beat it by like a small percentage. Another thing is when these companies got these small like percentages, and it was going down, they're not even making no more money. So P&G is pretty much worthless. Microsoft. Yeah, we gotta go small caps, bro. Because Microsoft don't hurt. P&G don't really hurt. And Microsoft beat earnings, but they down $24 today. Like this one crushed me because this was up 1,800 already. Like it was already up. You feel me? That's what I'm saying. The contract was 2,500. Now right now it's worth 600. That crushed. Like that's getting crushed. Like that's getting crushed, bro. Can't do that. And then the thing is, I'm thinking like, oh, it's Microsoft. Like it's bound to rebound. No, like it can continue going down. That's the thing. But if we go small cap companies, you feel me? I put $500 on a contract. That's a small cap company that hit 1,500. I'm looking to pull that out. I don't really know this company. It doesn't have any proven techniques of being, you feel me, something that I'm supposed to be in long term. Of course, I'm gonna pull out. Microsoft has a proven track record of being steady in the market long term. Therefore, the contracts are more expensive because it guarantees better security. As you can see, lost today 1,700. Like the contract only cost me 15. You feel me? I lost half of the contract though. Like that's not cool. Yeah, it's probably gonna rebound, but how long before my contract expire? I don't know. We're gonna be in the same situation where it was like McKesson. So that don't work. That don't work. Anyway, so that don't work. And like I said, this happened in 10 minutes. Like as soon as market open, crushed me. It's not cool, B. It's not cool. But anyway, we got our strategy. We wanted to let y'all know that's what we going with from here on out. $400, $10,000 account, too much though, bro. You get hit with a 33% loss in a day, as opposed to it being like, if I put $3,000 on mid cap companies, I'd probably be able to get like 40 or 30 of them. Like out of 30 companies, maybe 12 might strike. But between those 12 wins and those 15 other losses, it's going to balance out. It's just a numbers game. You got to be able to play big time in a numbers game. That's it. That's all. The only way this going to work. Because I don't know which companies are going to pop. I can look at the charts, but it's not a guarantee. Like I'm saying, this could be the start of the uptrend. Definitely. You feel me? You got this is considered a downtrend. Boom. This is considered a downtrend. Then you got the bullish pinball. You got the bullish hammer right here, and then you got the doji. So it's going to range between this gap, between right here and right here. No, wait. Where's the last doji? Right here. No, that's a bad one. That's a bad one. you want to get this one right here, this doji, then consolidation right here. Then you got it reapprove. You got the hammer right here. That's what I mean. The hammer and then the doji. So that's what we need, bro. Yeah, let's check earnings. See if they expect it to be, or if they expect it to like increase crazy. So yeah, this is kind of good right here. So high, mid, high. They probably go mid. They going down in earnings per share, but up in revenue. All right. Damn. We're pretty much banking the bank on this shit. Might get sticky, folks. First thing I'm gonna do though, I'm gonna pay myself, dog, and I'm gonna basically pay these bills first, player. Google already had earnings, right? Yeah, I need that dodo. Fuck that, we out of there. So we'll close Google and then we'll ride out the rest of them. Let's look at the chart first. I don't want to sell nothing prematurely. Alright, so ran right into resistance on the day. Like clean into it. Yeah, I was supposed to sell right here. Cause this is the inverted hammer. This is the doji. This the doji confirming downtrend. I mean confirming uptrend. And here's the hammer. There's the hammer. There's the doji. Boom. Sell right here. And then now it's hitting resistance. I mean it's hitting support. But the last doji is way the fuck down here. We got one right here though, at the 20. But it blew through that support. It blew through there. And then the next one is right here, 171. But you got a lot of, you got it really at 169, 168. Then you got the, it's like 168. It's like 168. Where it can like bounce. You see this one? 1, 2, 3, 4, 5. Then you got a hammer right here on the downtrend. Yeah, it's like right here, right in this range. Wow, so it's going a week. And it bounced right off of there too. It bounced right off. They got potential to get back up here for sure. Alright, man, that's the streamy.